So the markets, let me take that again. 3, 2, 1. The bargains in the stock market are a little harder to come by than they were, say, at the beginning of the year. But there are still some very attractive stocks in the market. I've been doing quite a bit of buying lately. I'm planning a pretty nice buying round for September. I recently did a video about that. But I want to dig into some of the most recent new positions we've opened or stocks we've added to. For me, the latest position I opened was a stock that you've probably heard of. I can't say the same for Tyler. Mine was PayPal, um, ticker symbol PYPL. And this is really a value play. If you had told me 5 years ago I was going to be buying PayPal as a value play, I would have said you're crazy. But here we are. PayPal. The reason it's a value play is that its growth has slowed down dramatically, and it pretty much has conceded that it's done its rapid growth phase. It wasn't that long ago they said they were going to roughly double their membership base or their active user base, and that's not going to happen, quite frankly, anytime soon. But still a powerhouse business, 435 million active users. It processes $1.4 trillion in annual payment volume, and it's a very profitable business. It has a 14% net profit margin, and it's generating about $5 billion of free cash flow a year. The management obviously sees some value here. They're spending most of that free cash flow on buybacks right now. They're opportunistically investing in the business as things come up, and it gives them a lot of financial freedom. But it trades for 12 times forward earnings, which is, for a company like PayPal, is just a bargain. So I recently opened a small position in PayPal. I used to own the stock a long time ago. I got shares when it spun off from eBay, and ended up selling those during the 2021 boom. But I recently bought back in. It just seems like a great value. And I compare PayPal, not that I'm saying PayPal's ever going to get to be the size of Apple, but I kind of think of PayPal as like Apple about 5 years ago, when it was really in that transition from being a growth company to a value company, and investors really didn't know how to value it. And they figured out ways to add adjacent parts of their business and really build out their revenue base, which is kind of how I see PayPal playing out over the next 5 years. So Tyler is going to talk about a stock that maybe one or two people watching this video have heard of, but I'm actually curious to hear about it. Tyler, what was the last stock you bought?
Yeah, so you and I have talked a lot over the past year of kind of my quest to kind of go off in far off places and look for stocks that a lot of people probably aren't talking about, and look for values in different places. And I happened to land on a company called Hexatronic Group. They're actually traded on the Stockholm exchange instead of on the US exchanges. And what they are is they were one of the leading or largest producers of fiber optic cable and ancillary products related to fiber optic cable in the world. So if you're thinking undersea cables that, for moving from, continent to continent, they're one of the manufacturers of that. They're one of the premier manufacturers of fiber to the home related equipment and cables. So, part of the Inflation Reduction Act and some of the other ancillary spending programs that we have in the United States that's spending a lot on fiber for rural areas. Hexatronic is actually one of the larger beneficiaries of this. They're one of the United States is by far its largest market in terms of sales, and it's recently just opened 2 more manufacturing and distribution facilities in the country to meet that demand. This is a company that has grown aside from fiscal year 2020, it has grown revenue over the past 10 years by more than 40% annually, and has grown its net income, 10 years ago from $400,000 to over $89 million today. So it's already a very profitable business. Its returns on capital are spectacular for a business growing this fast. It's actually even spitting out free cash flow despite its incredible growth rates. And I'm getting all of this at a forward price to earnings ratio of 11. Now, my assumption is if this was traded on the US market and people were actually paying attention to it, this would be a 25 to 30 times multiple kind of company. But the fact that it's over on the Swedish exchange and nobody's paying attention, it's selling for a song.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.